Alright, so just when I think I'm doing all these videos, you know, there's all the stuff, news, JP Morgan, MF Global, silver, gold markets, Webbot report, you know, people can't get their gold out of the bank that they had in an allocated account, you know. It's got to slow down a little bit. There's not going to be any more stories, you know, now, is there? Well, actually, there is. I'm going to start out with a place in St. Louis County. Someone posted this on my website, as a matter of fact. The Safe Deposit Company in Frontenac is being sued by a Nevada man who says $260,000 worth of gold coins that he kept there disappeared. Just when the gold coins went missing is a mystery. What is known is that Barry Thalden began leasing a safe deposit box at the company 2 decades ago, storing a mix of U.S. gold coins and ones from South Africa known as Krugerrands. In the lawsuit filed Wednesday in St. Louis County Circuit Court, Thalden claims he never terminated the lease or removed the coins from the lockbox. But Thalden says when he went last month to retrieve his valuables, a company agent escorted him to the box that can only be opened with his one key. They opened it, and they found someone else's items inside. His coins, 19 $10 pieces, 14 $20 pieces, and 119 Krugerrands were missing. Thalden is claiming negligence, breach of contract, and negligent bailment, seeking at least as much as what he lost. Neither the company or Thalden's lawyers could immediately be reached for comment. So now he's got to hire a lawyer and incur hefty fees on whatever he gets back. If this bozo had his freaking coins in his own safe, in his own damn house, I wouldn't be making this video right now. There would be no video to make. There's nothing to talk about. He wouldn't be filing a claim. There wouldn't be news. There wouldn't be an article. There wouldn't be a news story. He'd be in his house. He'd be happy. He'd go open his little safe. Hey, there's my coins. He wants to pick them up and rub them and put them on his face maybe and kiss them or whatever. They're right there for you. Go ahead. So on another story, and by the way, isn't it interesting that these stories are now coming out? Hey, heard about that guy in Switzerland the other day. Hey, I just heard about this guy in St. Louis County. You know, I've had my stuff in safe company, some safe storage company, whatever, safe deposit box or a vault somewhere. Man, mine's been in there for a long time too. Years and years and years and years. Man, I better just go check just in case, you know? Just in case. I'm still paying my monthly security fee for them, and I get my little statement in the mail. But man, I'm getting a little nervous. I think I'm going to go take a look. And would you bet, I would, that you're going to find out more and more and more and more story just like this, or story just like the other guy in Switzerland went to go get his gold allocated account at a freaking bank. We don't have it. Nor did they say where it went or when it went there, wherever it did go. So we have this is from SGT Bull, and I'm gonna post his video because he talks to a guy that I guess he hadn't spoken to in a while on there. That's, you know, the guy, he talks about everything that's spot on. The market conditions, the economic conditions. Nothing's changed. Nothing's changed. They haven't fixed anything. There's no, you know, magic unicorn that they found that's just gonna make the debt go away, and, you know, no need for quantitative easing or anything else. So we have is this the apex of manipulation? Question mark. NetDania's 1 hour silver chart indicates approximately 105,000 silver contracts, each for 5,000 ounces, were dumped on the markets this morning, talking about yesterday, between 9 a.m. and 10 a.m. Eastern Time, as silver was smashed $1 from $28 down to $27. Now, mind you, it's up 67 cents right now at the moment. To put this number in perspective, 105,000 contracts is north of 500 million ounces of silver. Do you realize that the COMEX only has 35 million ounces allegedly on hand, and the London Bullion Exchange has somewhere around 100 million? Add them together, we'll call it 135 million ounces. What was traded in the span of an hour was 500 million ounces, yet not one piece of silver left any vaults anywhere It was a freaking piece of paper transferred back and forth. That's all it was. So he says, in other words, this is nearly 2/3 of the entire world annual silver production was traded in 1 hour. This is either capitulation / panic selling in the face of the euro / USD gapping down, or on euro contagion fears, or more likely the most blatant manipulated raid to date, even more than the infamous February 29th Leap Day massacre, which was a big sell-off too. And he says, as tomorrow, 5/24, which is today, is May options expiration in gold, we'll put our money on number 2, meaning it was a massive manipulation raid. They always like to raid on the end of options expiration. They'll raid other days too, but they love to raid on options expiration date. So, again, and as you'll hear him say in this video, has anything changed? Is our country's debt being put down, paid off, or is it going up? It's going up. Is Greece going to get their things fixed over there, their situation? Or is it looking like they're fixing to leave? Well, it's looking like they're fixing to leave and the euro is going to be in trouble. Is all this debt that the banks hold, did it just get washed away somehow and doesn't exist anymore? No, and as a matter of fact, it's even higher than it's ever been, ever. Ever. Etc., etc., etc. Those are all what we call fundamentals driving the prices higher for gold and silver. So while I say that, you say, well then, if they're driving prices higher, and this damn problem's been here since 2008, well why, for a little while now, has gold and silver been getting smashed for so long? It doesn't make sense. It makes sense when you see what the price was in 2006, 2007, 2008, 2009, 2010, etc. for both gold and silver, and where it has gone in 2011, and where it's going to go after they're done trying to manipulate this down as far as they can go, which right now they're having a hell of a time getting it past and staying past that $27 and into the $26 range. 500 million ounces of silver paper was traded in an hour span. What that tells me is that, as the webbot just said, I just did the freaking report yesterday, and they said, get ready to start seeing, and again, he was interpreting the report up to a month ago. It takes him a while to do that. It takes him about 3 weeks, sometimes to 4 weeks, to just interpret it and write it down, what his data is telling him. So this data about get ready over the next 2-3 months for major slamming by the elite, because this is their final push on silver and gold apparently. So if they just tried to push down on silver, and all they could do is move it $1, they pushed it down $1 yesterday. It ended up closing down only 50 cents, by the way. But during that time frame of 9 to 10 a.m. or whatever it was, 1 hour, they dropped 500 million ounces, or 105,000 contracts in an hour. And they only moved it $1 down. It took that much silver, basically, to move it down. That much manipulation and selling to move it down $1, only to have it bounce right back up today. It ended around 50 or something cents yesterday. It ended at that price. So even though it moved down $1, it brought back 50% of that and only closed down half. Today we're up 67 cents, at least right now. There's no telling how the rest of the day is going to work out, but there's major serious resistance right now at this 28, 27, somewhere around their dollar level. And if these elite are trying to show people, we're smash it again, and then they smash it and it moves a little dollar and then drops 50% off of that, it goes back up to, only a loss of 50 cents instead of $1, and then the next day there's plenty of people with two hands out there buying paper contracts. And it's probably not the commercials, but it's probably the big players, maybe some hedge funds or whatever, the big guys that can compete with the banks, and the banks are the commercials, basically. Perhaps it's them buying it up, realizing this is the price we want to be in at. So as they're going to talk about in SGT Bull's video, he's saying, yeah, the price is pretty low right now. It's, it's $28. It certainly isn't $10 where we've seen silver back in 08 and early 09. But he gives a good point. When some of the big crisis hit up first, there was a span of several days where you couldn't get any gold or at least silver. I don't know if he was talking about gold and silver, but I think he was mostly talking about silver. And you couldn't get it. And then he's mentioned it. You could only get these 100-ounce bars that a company made a die cast, whatever, for, that normally make metal pieces of equipment for the silver pieces of equipment for medical industry, and was told, make it. You guys have the silver right now. There's a major shortage on the market. Make a 100-ounce bar. So they did. They filled the demand. They were the only ones apparently at that time filling the demand. Had they not, I don't know what would have happened to the silver market. It could have exploded out of the elite's control, even though the price was slammed down to you know, $8 or $10 or whatever, or $10. That's got to happen again, because you see they're getting more frequent with their attacks on silver and gold. They used to let months and months and months and months go by and then hammer it, wait for options expiration, not hammer it too hard, but definitely hammer it a little bit. Now they're just trying to smash it every chance they get. Good news, bad news, okay news, news that should make the freaking silver and gold go up. They try to push it down at the exact same moment, etc., which is what just happened here the other day, yesterday. All the news out there, the euro and all that crap, that's positive for gold and silver. Yet, hey man, they were down. How could that be? Because a piece of paper is setting the price. And for every one of those pieces of paper, every 100 of those pieces of paper, or excuse me, yeah, there's 100 pieces of paper contracts, 100 contracts for every one real contract of 5,000 ounces. They all claim they've got that 5,000 ounces. And naturally, on the piece of paper, it says on there, no, this is your 5,000 ounces, and it's only yours. But since nobody ever demands delivery, in other words, a tiny percent does demand delivery at the end of their contract expiration, they go ahead and give the rest of the money and buy out the contract and get the physical silver. Because so few people do that, or companies, or whoever's into it does that, the people who handle that, which is the COMEX, JP Morgan, the boys, understand we could write tons and tons and tons of contracts in multiples of what we really have on hand, because nobody ever really, it's kind of like fractional reserve banking. Everyone puts their money in the bank. Everybody doesn't go back in the same week or month even and pull out all their money. No, they put all their money in it and then just take a little bit out here and there. So they realize, well, we could do this on the paper COMEX market, the exchange. But as economic conditions worsen, we're finding more and more deliveries taking place, and more people not even messing with that and just going and buying physical gold and silver bullion from you know, a store, basically, you know, a bullion dealer. So that's another thing driving the silver OA from people who would sell it like on the COMEX. You have them, and then you have also manufacturing needs, because it's in every electronic component you can think of, and now you're having an investor need. So there's the third investor need kicking in all of a sudden, which I say all of a sudden, but it's happening over the last 3 years. More and more and more so. You can see the news from even the countries buying more and more tons of gold and silver. Every freaking week, there's somebody that wants their gold back from the Federal Reserve or London. There's somebody that, you know, bought more, to like China or whatever, just buying absolute incredible tons of gold, surpassing every other time the year before. You know, last February they bought such and such tons. This February they went up, you know, 250% more gold than they bought in 2011. And by the way, in 2011 they were up 400% of the gold purchase they were in 2010 or whatever. You know what I mean? You know, as an example. So you can see where this is going. So your brain's telling you, yeah, but the prices are down. This doesn't make sense. I don't feel comfortable. I don't know if I want to buy more because I bought at 35 or whatever, and now it's 28. Man, I don't know about this. If you bought at 35, I hope you bought because you were listening to me and you understand what we're dealing with right now. As the price goes up, then it goes back down, and they hit it and they slam it. This is a blink of an eye of the time frame that I told you you're going to have to wait to see these incredibly high prices. It's a blink of an eye, so don't get caught up. And then all of a sudden, hey, oh, we're back up to 37, 38. Oh, all right, this is looking good. It's looking good. I'm feeling good now. And then they slam it down to 32, like they did the other, you know, a few weeks ago. 37.50, boom, down to 32 bucks. They slammed the hell out of it. So they keep doing it more and more frequently. Why would they have to do it more and more frequently? If the price keeps rising more and more frequently, and they can see, because they own the exchange, they own everything that has to do with transferring those paper assets. I hate using the word asset because it's not an asset at all. But those paper contracts, They know what's going on, who's buying, who's selling, what the demand is like, and they have a computer system that can just turn on and off like that and recognize lots of buy orders coming in right now, fulfill them. Because we know most of them are just going to turn around and sell it at the end of the month anyways. It's just a piece of paper. We don't have to come up with the silver. So we just put a pretend sell order or buy order in, whatever. And if the person happens to make a couple dollars, ultimately they're going to have to pay. But when you're JP Morgan and friends and you have the Federal Reserve at your back door with unlimited funding basically from the Federal Reserve, you can take a beating over and over and over by maintaining your short position and losing over and over and over in that short position. Just trying to fend off the silver people, keeping the price down on them, is costing you a fortune to do so. But because it is your duty to do so, because you're tied in with the Fed and we cannot have any competition to the US dollar whatsoever, it's guaranteed that there's a backroom deal. It's probably been signed off by a president a long time ago. No other current presidents know about it. It happened a long time ago. It's all hush-hush. They have the authority to do so. It's down there. It's working. No other president needs to know about it. Just let it continue. But it can only continue for so long. And as you're seeing, with these more and more frequent, rapid slams on gold and silver, they're running short on something because they wouldn't have to do it as much if that was the case. So I believe with what the video is going to tell you from SGD Pool that we're going to find out that there's going to be a definite silver and gold supply issue that forces the COMEX and friends to basically show their hand, in which they don't have the silver either. Because what would happen potentially is that, okay, I went to APMEX, I can't get silver, they're out again. They got, a 2-month delay. Well, let me try Monex. Go to Monex, 2-month delay. Only thing we've got is some of these 1,000-ounce bars, Okay, and then they sell out. Everyone's going to realize, well, the COMEX says they've got it. Matter of fact, they say they've got 35 million ounces of silver, and the London Exchange says they've got 105 or whatever million ounces on their exchange, but you have to buy a futures contract to get it. Well, that's fine. Not only am I going to buy a futures contract, I don't want to come up with the 10% to play the game. I'm going to give you the whole 100% so you can immediately deliver the contract, the real goods to me. So call the exchange or the broker, whoever's in charge of that. I want a 5,000-ounce futures contract of silver. I've got the money in full. I would like this delivered as soon as possible. What do I need to do? We'll buy this futures contract. We'll handle that for you and blah, blah, blah. And then you'll start to see people getting delivery. And I will make a guess here and say that shortly after that, the deliveries start getting delayed big time and more delays, and it's taking longer and longer for them to deliver on this 35 million here and 100 million ounces over there. And if it's there, why are these delays taking place? Because it's not there. And all of the money that they're trying to put these fires out with, all these, silver, they're trying to put the fires out with, God, these delivery, they want delivery, we got to move this silver over here, give it to them. That silver and gold they're moving for delivery, that's that bozo in Switzerland who went to go get his allocated gold, and that's this other bozo who went to get his gold out of a safe deposit box. It's gone. We lent it out, we sold it, whatever, it's not here anymore. Sue us. And then you got to go buy a lawyer, pay his fees. It's going to be dragged out in court for years. They'll end up settling with you for pennies on the dollar because you'll had enough of waiting for so long. They don't care. Or, you know what's even better? We'll go bankrupt. Sue us now. We're bankrupt. Have a nice day. If gold and silver is not in your possession, it's not yours. As they say in court, 9/10, what is it? Possession is 9/10 of the law or whatever. So, at $28, silver's a buy. At $35, silver's a buy. At $45, silver's a buy. At $10, $15, $20, silver is a buy. Because if we do see, holy cow, they slammed it down to $20, $18, and you're not quick enough to go buy some, delay, we don't have any. Gotta wait 2 weeks, gotta wait 3 weeks, and we're not taking orders right now. We can't take orders right now until we get some more in. It may start off where you can buy it now. Here's my money. I'm locked in at $18. I'll wait 2 months. That's fine because I'm locked in. And hopefully it'll ultimately work out in your favor. But if by chance it doesn't, and then these places like APMEX or Monex or whoever realize, man, it was $18 when we locked in these contracts because there's such a demand-supply problem right now. Silver's already back over $35 and climbing by the day. We don't want to honor these contracts. We don't want to honor someone that's $18. That's crazy. We want to make a lot more money. So what they'll do is say, well, we told you give us 2 months, and if we don't have it in 2 months, this contract can be null and void at that point by either party. So they'll wait 2 months, or whatever the stipulation is, and then tell you, we still didn't get enough silver in, so we're going to have to cancel your account, and, check back with us in another week or so. Oh, you know what? Next week, we got it. The week after your contract was canceled, we got it in. We got the silver in. Oh, so I can get it $18? No, sorry. You got to pay $35 now. Or matter of fact, it's $40 because a week went by. In a supply situation, you could see stuff like that. You're going to see all these sneaky ways of these places that were legitimate bullion dealers, where when you lock a price in, you better pay for it. Even if the price plummets the next day and they haven't even put the order out yet, you're still locked in. You're going to have to pay that price. Sorry about your luck. And when it goes to reverse and you lock in, their contracts usually say protect them because you're buying from them. And it basically will state ultimately that you're locked in, except for A, B, C, D, E, or F takes place. You may not be locked in anymore. And they'll make sure A, B, C, D, E, or F takes place, such as making you wait beyond the agreed time that you are willing to wait, say 2 months or whatever, to fulfill this order, or even a month, or whatever it ends up being. And then they send you a little email or letter. We still can't get silver, so we're going to go ahead and cancel the order now. Here's a refund of your money. Have a nice day. And then you'll find a matter of days or weeks later, boom, we got our silver supply in where you can now take orders. Everyone, press release, whatever, email blast, we can now take orders. Oh, great, but not at $18, $35. So that's why you got to be careful when you try to find a bottom in the market. As I said, I've already got the amount of silver that I've wanted. Twice I've set 2 different goals because I had more time. And I still have time now, so now I can kind of play with that game of maybe I should buy some, maybe I shouldn't. Maybe I should buy some, maybe I should see if it goes lower. I can do that. I can afford to. I've already got my silver. So after seeing 500 million ounces, by the way, sold on the exchange yesterday, and it only moved at $1 at the time and then lost back to 50 cents for a net loss that day of 50 cents, that tells me there is major resistance right now at this level, roughly speaking. I may have to go back in and buy some pretty quick. A little bit more anyways, is what I'm saying. We shall see. So anyways, I gotta go. Take care.